Hello and Hafa Day, my friends. I'm Jason Salas on location today with my good friends Gina and Liz from Remax Diamond Realty Guam, and we are in the capital. We're in Hagatna, coming to you from inside Bank of Hawaii, where today these two lovely ladies are going to interview a very good friend of mine, another friend, Calvin Hernandez, who is the VP and a longtime expert in the subject of home loans. And ladies, you are going to talk to Calvin about what programs Bank of Hawaii has for securing a loan and making sure that you get the home of your dream. I can't wait to see the information, so let's go to the boardroom and find out how Bank of Hawaii can help you.
Hello, everybody. We're here at Bank of Hawaii with Calvin Hernandez, and we're going to educate everyone about how to get started with bank financing. Calvin, so for somebody who's interested in purchasing their first home, how do they go about getting started?
Well, the first step is actually what we call pre-qualification. Nobody knows how much they can afford. So by going to a financial institution, we require three things: income, assets, and debt. With the income, we will be able to identify how much a person can actually afford. Mm-hmm. The debts will actually bring it down to a more what their affordable limit is on a month-to-month basis. And then the assets allows us to find what programs are available. 20% down, 10% down, or PA or rural development financing.
Okay. So how do you go about getting pre-qualified?
So the first step is actually walking into your lender, and if you have the documents ready, we look for the income. So income, we look for stability of the income. That's the reason why lenders look for tax returns and W-2s. Also, your latest check stubs will determine what the monthly cash flow is that the lenders can use to determine income. The debts, we will identify that when you authorize the lender to pull the credit report. And the credit report is, of course, our financial report card. And that allows us to identify all the debts. And with those two factors, we identify the purchase power.
Okay. So Calvin, do you believe getting pre-qualified will make the buyer more attractive to a seller?
Definitely. If the pre-qualification letter is issued by a lender, it gives the borrower a better chance when making an offer. It supports their offer with the documentation. Hey, I've already spoken with the bank, and this is what my purchase price range is, versus someone who's never talked to a financial institution. They don't know where to start or how much house they should shop for.
So what do you need to get pre-qualified?
Again, the income, then the assets. Assets would be your statements. How much money you have in your accounts. Assets could be retirement, 401k. It just shows the lender that not all the money is being spent, and that some of your income is being saved away in preparation for such as home buying.
Well, that's pretty much all your financial information then, is what you're saying that they'll need to bring in?
Correct. The loan program moves as fast as the borrowers, and everything is documented. If you tell the lender you make X dollar in income, the tax returns and the pay stubs support that income. If you tell the bank this is how much money I have in savings, well, the bank will require bank statements, 2 months bank statements, to show that money is in your account.
I see. So what is a FICO score, and why is that important?
A FICO score is actually a Fair Isaac company, and all they did was they created an algorithm to gauge your repayment ability. So if you think of it, it's like your financial report card, and it determines how much you borrowed, how often you borrow, and the most important is your repayment. How often do you pay, and do you pay everything on time? And so that historical report card then becomes the document that we use to give or to gauge whether you will pay us back once you get the mortgage loan. Right?
You know, Calvin, I have another question. Will this pre-qualification sheet also identify how much out-of-pocket expense the borrower will have to come up with and what their monthly payment is going to be?
The out-of-pocket expense is typically what we call the closing cost. If you break down the financing, the the bank will give typically 80% of the loan amount. And that's where most borrowers come in with the 20% down. So that determines part of the out-of-pocket expense. Now, there are programs out there such as the Rural Development or VA that have 100% financing or no down. So those two programs change your out-of-pocket expense already greatly. All other costs such as escrow fees, lenders and owners title policy, those are what we call closing costs. It's the cost of all the work being done to get into that house. And that averages anywhere from 2.5% to 3.5% based on the Guam market. So that's basically how much you would be using as out-of-pocket expense.
Okay.
The closing cost, which is about 2.5% to 3.5%, and then depending on the loan program, how much down payment you're going to need.
Okay.
So once they've been pre-qualified, what's the next step? What do you recommend they do next?
The next step is to talk with the realtor and start shopping for a house within the price range that the lender provides. What we want to do is let you shop for a house within your affordability matrix, right? And that's the purpose of pre-qualifying. Most people make the mistakes of start shopping for a house out of their price range. And then when they walk into the lender can render a decision that may not be favorable to them because they were shopping out of their price range. So the pre-qualification should be the first step to identify the price range.
Yeah,
And
we've had situations where they're heartbroken
Yes.
because they haven't been pre-qualified.
And it's a very emotionally driven transaction.
That's right.
And so what we want to do is set off to the right start by getting pre-qualified.
And what we're finding nowadays is we have situations, and this is occurring almost on a daily basis, where we're writing up an offer on something. We find out that there's 2 or 3 or 4 other offers on the same property, and having that pre-qualification letter really
Makes
has
a difference.
helped.
It gives them an advantage
Yes, it's
over the others that have not even gone to the bank.
correct, and it's a strong advantage because the lender, basically your borrower has spoken with the lender and given the initial information to render a pre-qual letter.
Thank you, Calvin. We want to thank you for your time. It's a lot of information.
Yes.
That's right.
Yeah.
We just have to send the buyers to you. You can take very good care of them, give them the information they need, and then we do our job in terms of taking them out and finding that right home based on what you've pre-qualified them for.
Correct. And again, pre-qualification is free. So you shouldn't be ashamed. Just walk into the bank. If you have information about your income, your assets, and your debts, then we will be more accurate with identifying the buying power and then pass it on to the experts to show them the right house.
Perfect. Thank you so
Thank
much
you.
for your time.
Okay?
Thank you for joining us here at Bank of Hawaii with Liz and Gina, House to Home on KUAM TV.